Welcome, everybody, to the Ticker Highlight Show, starring Leisha Leslie, with Andrew and Marcus on vacation. It's time for the Ticker Highlight Show. How was your weekend, Leisha? How was everybody's weekend? If you're new to the show, say, hey, I'm new to the show.
It was great. We had family parents weekend at TCU. And of course, we lost by 1 point in the last 5 minutes of the game. It's pretty kind of a drag, but it was fun to
all
hang
the
out
money
with
you're
the kids.
spending on tuition there, that they would have like the best football team ever in history. Like they should never lose.
You'd think so.
You would think so. I know. Yeah, we have a parents weekend, but I think I'm going to miss mine because my mom has some surgery, so I'm going to fly down for it. But anyway,
Vicky just said 100 days till Christmas. Holy cow.
I know. And then somebody is like 45 days to Halloween.
I like Halloween.
I do too. My neighbor puts up all these little blow up things. Well, he kind of lives over that way, but anyway.
Shall we get started with?
I guess so. Do you want to? I think we're talking about Google today.
We are.
Coming
Do you
under a
want to
little
talk about what Mark?
antitrust issues.
Go ahead and be Mark for a few if you want.
Okay, yeah. Google under a couple of antitrust issues. Oh, I forgot to mention, I am doing something called, what are we calling it? The Big 10 or something. Hold on, I forgot the name of the show because I was calling it long shots. But I'm doing a webinar on Thursday. Don't forget. We'll talk about it at the end when I get the name of it squared away.
Flash 10.
Flash 10. Thank you. It should be fun. It should be fun. It's going to be totally new for me here at Option Pit. So it's new for Option Pit. It ain't new for me. And I did post one of the stocks that's on my big list, SATS. It's kind of getting squeezed a little bit, which is what I want. But anyway, I'm just putting it out there. You know, it's there. SATS.
You mean ASTS?
No, SATS.
Oh.
ASTS is a Voz stock.
Oh, look at that.
Yeah.
Nice move today.
It's been doing a thing. So this is the old EchoStar. I don't know. There's something going on, I think, with Elon Musk with his selling Starlink. That's making it a little more, but it's got some. Anyway, there's some action in it. All right, that's for Thursday. So you're gonna have to wait. But since you're here, I gave you a little freebie look at a stock that's on my list. Not just because it's up today. Not just because it's up today.
You can flash at home by yourself there, WA. Just make sure your camera's off.
Mike? Crap weekend. Daughter tells me she's getting married next month. Wish she'd do some guy a favor and stay single. That is quite the funniest thing I have ever seen in our chat, possibly. That was quite funny.
You know, Scott and I kind of eloped. We got married at City Hall.
Really?
Yes, my dad had a fit.
Was was Scott afraid of your dad?
I don't think so. Maybe. Everyone was afraid of my dad. He was a cop. So yeah, everyone was afraid of my dad. Any guys you dated.
Did you guys get married, like 99, 98 or something like that?
95.
Wow. Oh, wow.
We went to City Hall after the close on a Friday and got married, but I called them the next day and they were still very mad. Like, you guys know Scott for 3 years. We didn't want to do the big hoopla and they were not happy. Yeah. So it's a parent thing, I think.
Well, it is a parent party to some degree.
I guess.
But Anyway.
All
right, Google, what I would say is, so a couple of things. Mark has something called the Great Eight, which is the Magnificent Seven plus AVGO. Number one. Number two, right now, Google is not liked by antitrust people. And that's something that Frank had talked about with us a couple weeks ago. We bought a put in there. The trade ended up working out okay overall. However, our put didn't quite make any money, but since then, Google has really underperformed. So it's not looking good. Is it one of the biggest franchises around on the internet? Yes. Is AI from everywhere else a significant threat to their franchise? Yes. So we're setting up, and I think, look at, and Leisha's going to go over the chart because that's what she does. And when Leisha makes observations, I pay attention. It's one of the best benefits at Option Pit. So, but I think you've got you've got, large franchise. However, AI could be a significant threat, and plus short term, we have all of the, all the anti-competitive stuff going through Congress. So, and they're big donors to politics. So you would think, but the Europeans are giving them problems anyway. So that puts us where we are now. So Leisha's actually doing it in the marriage column. She's almost 30.
29 this year.
29.
In November.
My wife, unfortunately for her, is 22. We're 20. What are we? 22, 20, 23 years. So
my
she's
favorite
still
joke,
there.
though, Andrew. Sorry, go ahead. My favorite
Connie,
joke.
married since 75. Blind date. The blind date's still going.
Wow, that's so cool, Connie.
Still got longest blind date in history.
That's cool.
We got a 47. Wow.
My favorite joke is it feels like 15 minutes underwater. That still makes me laugh.
Holy gosh.
It makes me laugh every time I say it.
Connie says, friends say on the blind date, friends say I was the one who was blind. Oh, we got 50. Wow, we have some half-century people in here. Holy gosh.
I love it.
It can work. I just wish the younger generation would understand, but that's another digression. My hubby says
Andrew, there is something going on with
the hardest. You matched 51.
That's pretty good, guys. The first 40 were the hardest. All right. Are we ready for the charts, Andrew, or?
Yes.
Way to go, Doug.
A lot of boomers in the house. All the people that aren't married are just quietly in the background. They're like, okay, we're here, but we're not saying anything.
So Google has had a nice bounce off my median line, off this very nice pitchfork. I think everyone should add to their TradingView charts. Wednesday, November 22nd of 2023 is your high. Your low is December 4th of 23. And your third point, your high is January 29th of 24. And you can see it's traded outside of that. So there's another one, but for now, you're good with it. Held the median line. You got to keep your pitchforks in there. It comes back and they're still valid. Nice little hammer there and nice rally. Once you clear this area, Andrew, we got to clear the most recent highs. Google will trade up to 161.30 and then possibly retest these highs up here, 167.60. Support, close near-term support is 155. And then below there, this little gap, 152.70.
Okay, let's see here.
But looking bullish, your MACD has just turned positive on Friday. It's looking bullish. It looks like it wants to clear out of these highs and trade up here.
So what's your number on the top up there?
161.17.
All right. So let's see here. Well, let's look at a couple. Well, you know, we do have this thing called the FOMC coming up.
Yes, we do. Which, by the way, everyone, we will go live for that. So make sure you join us Wednesday at 2 Eastern. We'll be doing that, Andrew, or maybe a few minutes before.
I believe so, yes. Because we do weekly profit cycles at 2:30. So, see, there's a little bit of a, okay, so we have kind of our range, and the bottom of our range is what? Here, let's see.
The bottom will be right here, 155.
Okay, so I just want to set up a little scenario for people
Yeah,
here.
155, 161.
All right,
And then below 155 is 152.80. 152.70, around there.
All right. All right. So today, September 16th. So we have our one around 155-ish, and then we have 160. What's our top? What's our breakout spot?
160. Oh, we want to break out over where we are right now, 158.
Okay. All right. So one.
That'll take us to 161.
All right. Break out. Out. To 161. All right. Let's see here. All right. So we got, so 155 is definitely kind of the dead zone here. That's the no bueno area. And then 161 would be a 161. We have a short-term target.
We're holding the 200-day here too, Andrew. I think it wants to rally.
Okay. I think in my mind, I like, because usually you got the antitrust and then everybody doesn't like it. It's weak, right? And then all of a sudden it kind of comes back. Because like I believe that this has if I put my mark hat on for a minute, I think Google has the lowest forward PE of any. Yeah. The forward PE of Google right now is 22, which is probably the lowest it's been in, I don't know, forever. So probably the only time it was probably lower was at the bottom in 20, because what was the stock? $90 then in 2022. Let's see here. Yeah, and there's okay. So anyway, so that, yeah, is we've got plus all the money that they have on their balance sheet, which is kind of enormous. $8 a share. So they're like,
would you like to share your screen?
Oh yeah. Sorry about that. So, all right. So we have, here's our, anyway, just, this is like some basic, they're around the 2 trillion. So again, enormous, but also enormous revenue, $300 billion a year. Just hard to believe how big this company is, but they are. And so let's take a look at some vols here and what's been going on. So I would say, so here's your 90-day volatility here. It's you notice like it doesn't really vary much here. Let's go like, and it's dropped like all of a sudden here, but it's starting to pick up from a low. So anyway, you can see here clearly, like all of a sudden there's some volatility, right? Little slightly larger candles, longer moves. So another thing too here, Alicia was calling for this little pop here, but like it does tend to, like when they don't like it, you have like 2-week moves, 2 to 3 week moves that are pretty solid, right? And it looks like we're starting a new one. So 24 volatility, I would say, is the average. And right now, you're about right at that number. And all the shorter term volatilities are much higher, 34, 27, 28. So if you can buy things at around a 24, so a couple of things, like a cheap calendar, a cheap call. And the only thing I would do is maybe you just put in some kind of just dumb, like, disaster put. Like, okay, like you want like maybe a little hedge, like buy some of this junk, but I think we could buy some calendars for pretty cheap here. Like a 165 calendar, if we get to 161 target from Leisha, that would pay pretty good. So if we did 65 here, and what's the bid here? Because that vol's 30% now. There's a little, well, what does that put the calendar at? That puts it at about $2. I don't know. Do you really like selling that? Huh?
Sorry, what months are you looking at?
Okay, yeah. So let me, so right now I was trying to just set up the October as the buy side. Like the 170 calls, I know that sounds crazy, but if it does, move, we could get some, they're only a 25 vol. The 160s at a 25 vol, I think are very, again, based on where that 90-day vol is, you're not paying a lot for these calls is the short answer. So you've got a lot more short-term volatility than you're paying for the current calls. Now, is it worth creating a calendar if we buy these 160s? Let's see. I don't like the calendar so close to the money with the Fed coming out. It would have to be more out of the money because you want to spend a little less money out and you have more potential to make dough. But I think at a 25 volatility here, let's take a look at what 25 vol looks here. So let's look at a slightly different perspective. So this is our 90-day vol. So the vol has not come down to the lows, which is in the very low 20s. Right? And it's still reflecting the movement we have. But here, if you look at it from this point of view, right? Even just the last like 20 days, you're getting like the volatility here has been straight up last 10 days in Google. And here's where we are with your implied vol. So I think the options are, if anything, they're slightly underpriced, but that's what the market's giving us, which is okay. I'm trying to decide like what's a straight up play. I think you would buy probably the 165s for 230.
Yeah.
That's just a straight up option play.
Yeah, I like that.
And trying to I think that's something, if we go to 161 on a 30 delta, those go to about $3, $3.10. And then if we get a real move higher, they'd be a little higher than that. This is an easy hedge by using a 145. So let's say Google gets below 157. You can either hedge now or later, because these puts aren't going to go anywhere for $1. It'll take a long time for them to go away. That would be like your disaster hedge on a call. So let me start to write some ideas down here. So we got sort of some 3 prices here. Overall, implied volatility is relatively low. So, right, so going out. So now why do I go out to October is the decay. They're just like, these options aren't decaying until the Fed says anything anyway. So you get like a free couple of days at least, right?
Yeah.
All right, so the Google October, I believe those are the 18s.
Yep.
October 18. So if you want like 165 calls straight up for 230 as our little, basically lift with the market play. And then you could a hedge here. over it. Because they do get kind of that to 155 and that kind of nasty zone. That's where you have that free fall capability, right? If we break down below that level, Alicia, then then
Right.
things get ugly. So you're not spending a ton for this put, but you're hedging against the ugly. You break, you kind of go below this sort of, we'll call that the yucky area. That's like if stock goes below there, then there's problems, right?
Yes.
And then this put, doubles, triples, and values, vol starts to go up, and at least you're out of your call for nothing. So anything is you decide you can hedge your call by, okay, I'll stop it at $2. You could do that. You could buy a put that will gain in value that will start to hedge your call automatically. Or you say, I'm only going to buy one call, and wherever it goes, and I don't close it unless it's maybe down 50%, just to save money to try to do another trade. Those, you got your three choices on how you want to do it. However, I would say with the IV so low, the cheap strangle, again, when are strangles the best?
When your implied vol is the cheapest. I'm sorry. I just pulled an Andrew. I'm not supposed to answer.
We can let the class answer, okay? Right when you have relatively low vol. Relatively low vol.
That was a total Andrew.
Google, but they could also settle next week, Vicky. So we're going with what the volume's saying, and the volume is starting to bounce off the bottom. And if we hold this level, get to 161, our trade's paying us. So you don't need a lot for $158 stock to pay you money. So again, this is, you would set up something like this. Could you come up with a diagonal? Go ahead, Leisha.
Go ahead. I was going to say the AC4 67 halves are about 80 cents.
So you sell those and then you buy these, and you're into the trade for
$1.50.
Only about $1 and change. That's another way. Oh, now she's making fun of my cheap strangle. You try talking, trading, and writing at the same time, Vicky. All right. Everybody knows what a strangle is. It's a strangle without the R. All right, and then we'll do a Leisha variation, which here. So there you go. So this is sort of the ATG AG variation, and then we'll do a little Leisha variation. So that I would say this is self-hedged to some degree with that cheap call. So you buy the AUK 18 165 call, and then you would sell. I'll sell. So STO is sell to open, then 1 Google October 4 167.5 call, and then you're basically just selling the breakout there. So you got a little diagonal thing going on. This is Leisha door number 2. We don't have Mark's door because he's not here. He's apparently partying somewhere. Boys weekend. Long boys weekend.
I love it. I think it's good.
Yeah, I've already done my quotient of boys weekends. Like I've tapped out mentally on them. There's nothing I could do on a boys weekend I haven't already done. So 165, and then here's hedge. Okay, so we got some things. TikTok is in court. Okay. Oh, okay. Oh yeah, if TikTok gets broken up or something. So anyway, this would be a straight up, but either trade would do okay. I think this trade comes in around what was it, 230 over 80, so that'd be about a 170, 1.70. You could be out for 25-30% on this, and the strangle, who knows? So it's what you really like. Either way. Oh man, dude, we already talked like for 24 minutes. I will put on, I kind of like the strangle. I've done well just because Google moves. When it trends pretty big. So here we go. And I'm going to put a bit in for my strangle and see what we go. We had some pretty decent trades the last couple of weeks, to be quite honest. So depending on how you manage them, you did okay. And all right, here. And let me see where we are here. Alrighty. And I'm putting in a little bit for my strangle. And that's it. And then I got to run to a trading desk. Anybody? Okay. So also Friday, there's a link up above. I'm doing my, I'll still can't remember the name because I've been calling it long shots for about 2 months now. And now it is the
Flash 10.
Flash 10. Somebody please give me a
I'll get the link.
Translate. Look at my own students. No Delta strike today. No Delta strike. And for those of you who are not trading desk members, hey, I'll be teaching about flies. We'll go over SVIX, what's going on before the Fed. So if you want to learn more stuff about options and you like this kind of analysis and you like traders who actually put on the positions and try to make some money, you've come to the right place. And I'm going to put my strangle in right now. And that is about all. Thank you, everybody, for coming. Leisha, it was a pleasure as always.
Great to see you, Andrew, and everyone else. Thank you for joining us.
And also, I liked all the people giving us the marriage things. That was good.
Yeah, that was great. I love it.
All right, everybody. Have an excellent day.
Don't forget Thursday. I'll drop the link as soon as I find it. Come and join us, Andrew and Hannah, on Thursday.
Top. There's a link pinned on the top.
Oh, awesome. Yep. Thank you,
all right,
Christian.
Lisa, take care. Have a good one. I'll see you later.
Have a great day, everyone.
Bye-bye.